Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hua Hong Semiconductor Limited latest report. Hua Hong Semiconductor Limited offers a diverse range of businesses and services across various industries. At its core, the company provides semiconductor products, including embedded non-volatile memory, standalone non-volatile memory, power discrete devices, analog and power management platforms, specialty logic RF processes, and image sensors. In addition to manufacturing and selling these products, Hua Hong Semiconductor also offers a range of services. These include foundry services, design services that cover various aspects such as design methodologies, Internet protocol development, ASIC design, and one-stop services. The company also provides multi-project wafer services, mask marking services, back-end testing and development, mass production, product engineering, and backside processing services. Furthermore, Hua Hong Semiconductor engages in real estate development and trading activities, expanding its scope beyond semiconductor products and services. Its products are utilized in various applications, including consumer electronics, industrial control, automotive electronics, Internet of Things, communications, computers, and power management. With a presence in China, North America, Asia, Europe, and Japan, Hua Hong Semiconductor has established itself as a global player in the industry. The stock price of Hua Hong Semiconductor has skyrocketed by over 258.74% in the past year, driven by a combination of factors that have created a favorable environment for domestic chipmakers like Hua Hong. China's strategic push for semiconductor self-sufficiency has been a key driver, with Beijing's efforts to achieve self-reliance in semiconductor technology directing investor attention towards local foundries. Hua Hong's capacity expansion and new fabrication facilities have also contributed significantly to the surge in its stock price. The company's advancements in expanding its production capacity, particularly the ramping up of new 12-inch production lines, have been met with a positive market response. Additionally, the global semiconductor industry's recovery, fueled by investments in AI infrastructure, consumer electronics, and end-user application requirements, has benefited Hua Hong Semiconductor. The company's restructuring and acquisitions, such as its deal with Huali Micro to enhance its 12-inch wafer foundry capacity, have also been notable events. Furthermore, Hua Hong's strong performance in key market segments, including analog and power management, industrial and automotive sectors, has driven growth. The rising demand for power management ICS and CIS, driven by the proliferation of AI and electric vehicles, has been particularly beneficial. The tightening of controls on foreign AI hardware acquisition by Chinese authorities has also intensified investor focus on domestic semiconductor manufacturers like Hua Hong. The company's price hikes and improved financials, including a 22.4% quarter-on-quarter revenue increase in its fourth quarter 2025 results, have further contributed to the surge in its stock price. Overall, Hua Hong Semiconductor's stock price has skyrocketed due to a combination of strategic government initiatives, capacity expansion, industry recovery, restructuring, and strong financial performance. Hua Hong Semiconductor Limited market capitalization of $201 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Hua Hong Semiconductor Limited holds a significant advantage in their industry. Hua Hong Semiconductor Limited trades at a higher price-to-earnings ratio of 664 times and a higher price-to-book ratio of 3.43 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various market trends. On the growth side, increased wafer shipments, improved average selling price, and optimizing product mix have contributed significantly to revenue expansion. Additionally, reducing costs, improving operational efficiency, capacity expansion, and demand for AI-related products have also played a crucial role in driving revenue growth. Furthermore, recovery in consumer demand led by the domestic market, as well as increased demand for other PMIC, MCU, Flash, and CIS products in key regions such as China, North America, and Europe, have all contributed to revenue growth. Embedded NVM, standalone NVM, analog and PM, logic and RF, and revenue from 65 nm and below technology nodes have also seen significant increases. On the decline side, decreased demand for general MOSFET products has led to a decline in revenue. Revenue from 0.25 micro-M technology node has also declined due to decreased demand for discrete products. However, it's worth noting that revenue from 0.35 micro-M and above technology nodes grew by 2.3%, driven by increased demand for general MOSFET products, but this is a decline in other areas. Overall, the drivers of revenue growth or decline are complex and influenced by various market trends and regional demands. The net income and profit margins of the company underwent significant changes between Q4 2024 and Q4 2025. Notably, the company transitioned from a loss of $25.2 million in Q4 2024 to a profit of $17.5 million in Q4 2025, indicating an improvement of 80.6% in net income. The profit margins also saw a substantial increase during this period. The gross margin rose by 1.6 percentage points to 13%, while the full year 2025 showed an even more significant increase of 2.2 percentage points to 11.8%. This improvement in profit margins can be attributed to various factors, including cost-cutting measures and efficient management. The year-on-year growth in net income and profit margins is a positive indicator for the company's financial health. The ability to turn losses into profits and increase profit margins demonstrates effective business strategies and a strong recovery from previous challenges. The company's financial performance has shown a significant improvement in its ability to generate positive operating cash flow. According to the provided information, the company achieved a positive operating cash flow of $246 million in the fourth quarter of 2025. This is further confirmed by the net cash flows generated from operating activities, which also reported a figure of $246,026 for December 31, 2025. These figures indicate that the company has successfully managed its operations to produce a substantial amount of cash, demonstrating a positive trend in its financial performance. The company's debt level has undergone significant changes over the past year. Initially, it was reported that the total debt level had increased from 36.6% to 28% of total assets, indicating a reduction in debt burden. However, upon closer inspection, interest-bearing bank borrowings have actually increased from $340.7 million to $403.7 million. This apparent contradiction can be explained by the fact that while the absolute amount of debt has decreased, its proportion to total assets has also decreased due to an increase in total assets. Nevertheless, this reduction in debt burden is a positive development for the company. Furthermore, interest expenses have also seen a significant decrease, from $50,498 in 31-2024 to $32,834 in 31-2025. This decline in interest expenses suggests that the company has managed to reduce its borrowing costs effectively. In conclusion, while the absolute amount of debt has increased, the proportion of debt to total assets has decreased, indicating a reduction in debt burden. Additionally, interest expenses have seen a significant decrease, which is a positive development for the company's financial health. Management is optimistic about the company's outlook, citing a significant increase in revenue with a 22.4% jump from the previous quarter. This growth momentum is expected to continue as the company focuses on developing cutting-edge specialty technology platforms that incorporate innovations and rapid generational iteration. This strategic shift will enable the company to stay ahead of the competition and capitalize on emerging trends. Furthermore, management plans to strengthen partnerships with key customers globally, both domestically and internationally, to tap into new growth opportunities. To support this expansion, the company is investing in capacity upgrades, including the completion of FAB9's first phase and progress on acquiring FAB5. These initiatives demonstrate management's commitment to driving long-term growth and competitiveness. That concludes the financial summary for Hua Hong Semiconductor Limited. Feel free to comment below, and I will be happy to answer them when possible.